What is up? I got a trade recap for today. Let's fix the lighting a little. Yeah, I got a trade recap for today. Today is 10/9/25. Let's get right into it. Here we go. I got that set up. Yeah, it was a doozy today. Okay, so coming into the day, we can go look at the NASDAQ. Pull the NASDAQ and we'll pull up. I took the trade on micros, by the way, so we won't really need to worry about that. We're going to pull NASDAQ. We're going to pull up the S&P as well, just because these charts I'm pretty sure are pretty clean. Beautiful. I can enter in. Oh, I'm in the wrong one. There we go. Okay. So we're going to go back in the market replay. Start new. We're going to go all the way coming into the market at 8:20. Actually, let's go back even further. Let's go to 8 a.m. So coming into the day, we can look on the 1 hour and the 4 hour. We're at all-time highs, right? We're just going to get rid of ES for right now. Coming into today, we're at all-time highs. We have this 4 hour candle, which hasn't closed yet, if I don't recall. And we can just mark out our imbalances as well. Get rid of all this stuff, all this stuff. I have some sauce for this video today, by the way. I wanted to get this done after the trade, but I ended up holding this trade for almost 3 hours, which is perfectly fine. So coming into it, we had this 4 hour bullish for value gap. We had this 4 hour bullish for value gap. We had this 4 hour for value gap that got inversed. Potentially, it wasn't yet at the time. And then what else do we see? We see a 1 hour right here, which then ended up getting inversed. Not yet, but it got filled. I'm bullish on the day. I'm going to tell you that. I am bullish on the day. Why? Because we're at all-time highs. Why are you trying to short all-time highs? It's just stupid as fuck. So we're going to go to buy side liquidity. We're just going to mark out all our draws on liquidity. We got all this. We can mark out our sell side liquidity, which is right here on the there. 1 hour lows right there. We can mark out another 1 hour low, which is down here, which we will mark out like that. We can mark out another 1 hour low, which is right here. Beautiful. So we have 1 hour for value gap, we have a 4 hour for value gap, and we have a couple 1 hour lows right here. Coming into today, I wanted to see either us push buy side and get a retrace and go higher, or us push sell side, and I ideally was sell side and get a retrace, a reversal set up and push higher. So I had a bullish bias coming into the day because we're at all-time highs. But boy, was I wrong. So we're going to come, pause. We're going to move a little into market open. We're about to be there. And market opens. Boom. Market opens. So at this point, by the way, as market open, NASDAQ is ripping down. ES is ripping up. So ES ends up sweeping out its 1 hour highs, which then gave us a 5-minute SMT. And what do we see? Market rips down from that S&T. That was the move for the day, right? Well, I missed out on that move, and that was perfectly fine. But one thing we can note is we have that 1 hour low. What do? We sweep out that 1 hour low, right? So I'm still looking for buy side, but because of that SMT, it was like, oh, well, maybe we want to push sell side, or maybe the SMT, the bearish SMT, because like I said, ES swept out this high, NASDAQ did not. NASDAQ made a lower high, ES made a higher high. And it pushed us lower. So we swept out this 1 hour low, which we can get rid of. We swept out this 1 hour low, which we can get rid of, right? And we're wanting to see either like a 5-minute break, 5-minute inverse to the upside, right? So right as of right now in this setup, our breaker structure would have been all the way up here, right? What do we see? We do not get that breaker structure. We are kind of ranging, right? And finally, what do we see? We push all the way down lower into this sell side. So obviously the setup was wrong. My bias was wrong, and I missed out on an SMT, which would have been probably a crazy setup. I mean, you probably would have gotten in right around here. Beautiful. But we're going to start marking up some stuff on our higher time frames, and that will be this 30-minute imbalance that we have resting right here. We have a 30-minute imbalance, which I will just mark up as this. It's a little lighter. What else do we have? We have a 15-minute imbalance, I'm assuming, that was littered in between here. Not a 15-minute. It might have been a 5-minute. Yes, it was a 5-minute. Beautiful. And this made me bullish, seeing these two fair value gaps on top of the liquidity sweeps. I'm not going to be able to spread this out. Either way, we're going to be focused on the 15-minute. We see price ripping down, right? We're going to wait for the 15-minute candle to close. What does it do? It inverses it. It inverses that 15-minute. It's wanting to push us lower. Where to potentially? Is it a 30-minute? It's not a 30-minute imbalance. 30-minute is pressing way down here. Is it a 5-minute? Oh, yes. Beautiful. When here's first the 15-minute, this candle, there's a 5-minute fair value gap resting between here, which we respected. And it did push us higher. But now we're looking for, we're getting close to my setup at this point. So I'm going to be going back a little longer. What we wanted to see for a bullish bias, right, was this candle on the 15-minute to get respected. We wanted to see a 15-minute respect on this candle. And we inversed it. But we ended up respecting on a 5-minute fair value gap that was later over here. And we respected on the 5-minute, which gave us a push up. So what we were wanting to see then on the 5-minute, since we respected that 5-minute fair value gap, we want to see a 5-minute inverse or a 5-minute break of structure. Well, what do we get? We get a 5-minute inverse right here on this bearish fair value gap. So we have the 5-minute inverse. Now we're wanting to see a retracement, right? Or a break of structure. Our 5-minute break of structure was up here. So that was just another point to mark out. If we got the break of structure and then a retrace into a 1-minute fair value gap and a 1-minute break of structure out, I would have been buy side and I would have been targeting up to this high for a take profit, this high for another one, this high for another one, and all the way up to here, and potentially all the way back up to all-time highs, which is what my bias was, right? We're going to wait. We get a new break of structure point. We're going to go back 1 bar. This is where I ended up taking the trade on ES, and I'm going to show you exactly what I took. But now we have a new break of structure point on this 5-minute because this one, new high got made, high and a low. When we're in an uptrend, and well, I mean, we've already inversed, but we haven't gotten the break of structure, right? I want to see break structure. We do not break structure. Well, what are we actually seeing? You're going to see in a second here. We push lower and lower and lower. Oh, and this is going to be beautiful. I actually can't wait to show this. We're going to go back to here. We're going to pause this. We're going to start looking over on ES for the setup that I actually took today. Maybe I can pull up MES. Beautiful. Oh my gosh, this is disgusting. Full of shit. I wonder if I actually can go into Top Step right now. I'll show this trade on Top Step. Beautiful. All right, so we're on ES. Like I said, when we're looking on NASDAQ, we saw NASDAQ, which was coming up, and we ended up seeing, we're going to go to the 5-minute. We ended up seeing, like I said, that 5-minute inverse, which was right here, which was on NASDAQ, and we had the same 5-minute inverse, which was on ES. If I can mark it out, damn it. We can see the 5-minute inverse. We're looking for the break of structure then too, like I said, on NASDAQ. What do we see? We get the break of structure. It is up there. We see that price comes up, and why did NASDAQ not want to give? If we look on this, why did NASDAQ not want to give this break of structure, Because on ES, we had a 5-minute fair value gap that was resting right there, which is respected. This respecting changed my whole narrative. This changed everything for me. Because now I was also thinking potentially going for shorts, because if we look on NASDAQ, I believe it was, NASDAQ had a 15-minute fair value gap, which I'm going to mark up right here. NASDAQ had a 15-minute fair value gap. So like I said, we were looking for the break of structure, but potentially we could also be getting a continuation model. Because we had the reversal model, which was getting set up. We just needed to see a 5-minute break and a retracement. But we also could be getting a continuation model. This is why when you think you have the answer to the market's question, it will change the narrative. What do we see? Market comes into this 15-minute fair value gap, respects it, closes out, respects it again. Now we're getting crazy rejection. So once we saw the 15-minute fair value gap, I was wanting to see if we were going to get a break of structure out of this 15-minute fair value gap. And what could tell me that too is going on to ES, because like I said, ES ended up pushing higher, and ES came into its 5-minute fair value gap, which was sitting right here. As soon as we filled on that 5-minute, this is exactly what I saw. Saw the 5-minute. Market's still moving. We saw market come up into that 5-minute. I don't know why it's sitting right there. We saw market come up into this 5-minute, and then we're looking for a reaction out of that to see if we're wanting to push bearish. Well, we have a 1 minute fair value gap. We're playing out of a 5 minutes, so we're moving to the 1 minute time frame. We have a 1 minute fair value gap, which gets inversed, right? We're looking for a break of structure point though, which, where are we looking for break of structure? When we're in an uptrend, we're looking at lows, down candle, up candle. We have a down candle right here and an up candle. What do we mark that out as? Our break of structure, right? What do? I get in. Or was it more over here? It's a very good question right now. No, yeah, I got in right here. I get in right here because, see, that was the break of structure, which we'll exit off. Okay, I gotta go back. I just messed some shit up. We're looking for the break of structure, right? Which is on this low, or it was this one actually, down candle. It was this low, down candle, up candle. We break structure on it. I enter in right here. Where are my stops going? Well, we're playing out of a 5 minute fair value gap, so where my stops are going at the 5 minute high, which was right here, right? That's where my stops went. Now, where are we targeting? Like I said, we're in a bearish bias now. So where are we targeting potentially? We are targeting. We had. Just make sure. I'm gonna go to the 5 minute because the 5 minute will look a little cleaner. Let's just get rid of this right now, or actually let's not. Where are we targeting? When we're up here, we get that break of structure. I like to take, and I'm going to show a video in a second on this. I'm only taking trades where my first take profit is at a 1 to 3, and I'm going to leave runners from there, or just exit out fully at that 1 to 3. Well, what do we see today? That first take profit point was this 5 minute low, and that plays out for a 1 to 3 risk to reward. So I took profits out there. Second take profit, I believe, was this low, which was down here. We had a down candle, up candle, which ended up getting taken out, which that played out for a 1 to 4, right? That was my second take profit point, which I will just mark out like this. That was the second take profit point. And the third take profit point was this 1 hour low, which was down here. If we go to the 1 hour time frame, we had a 1 hour low all the way down to here, which that would have played out for almost a 1 to 6, but it would have been a 1 to 5, and it did not get that. Now I want to show you some crazy shit that happened in the market. After it got close to this first take profit, which is my first take profit zone, which is right here, right? This was my first take profit zone. Price comes all the way down into here. We get in on that break of structure, and price just rips down. What do we see? Not an SMT. Price just rejects. Now, that does not invalidate my setup. My setup is not invalidated until this 5 minute high gets pushed past. Then it invalidates the setup. And I was wrong. My bias was wrong. Well, what do we see? And it could have just been probability. Price comes all the way back up, and this is why you don't fucking take. I didn't take profit out earlier because there was nothing to take profit out until we had this 5 minute low. Price comes back up, comes to my break even, and what does it do? You see here, we made at this high, this 5 minute high, we made a higher low. I mean a lower high. We're on NASDAQ. We can go over to the NASDAQ. Remember this high up here, which we're going to watch in a second. We're going to see price push lower. What does price do? Price takes out that high, which we had right there. Takes it out after we push lower. Comes and takes it out, which is up to here. And we get a S&T. NASDAQ made a higher high. ES made a higher low, giving a 5 minute bearish SMT, making me even more confident that this setup was going to play out. But we needed to break a structure. So once we got that SMT, what do we end up seeing? We see, and I marked it out, our break of structure. Price break structure. That's where more people could have gotten in. I know a buddy who did get in on this, and he put his stops up to these highs. But this setup played out. And then what do we see in the 5 minute? After that 5 minute SMT got created in the 1 minute break structure, it comes up to my break even, it pushes lower, and finally takes out my final take profit. Goes for my second take profit. I move my stops to break even. And what do we see? Price just doesn't hit my final take profit, which is fine. And that is perfectly fine. But it comes all the way back up. Ranges for a while. Like I said, I got in this trade around 10:05. I got out of this trade around 5. It was a little before 5 because I want price to close me out, but I got out of this trade and I ended up hitting a winner on the day. Now, I have 3 losses and 1 win this week, but I'm break even on the account because of probability, because of, not probability, because of risk to reward. I'm going to play a video here in a second for you guys. But this was the setup for today. And I believe this was an A+ setup. And I'm not going to say, I got to put that back. I'm not going to say that because this setup is the reason the market got moved. That is not the case at all. And I'm going to play a video on that actually for you guys. This is from Mark Douglas. It's a short clip. It's a minute long. This is from Mark Douglas. And just listen.
Reason why the market went up or the market went down. Reason why the market went up or the market went down, other than the fact that there was an imbalance in conviction between buyers and sellers. Because the people who do this will not tell you unless it's in their best interest to do so. And the reason, and the people who report it in the news agencies, they don't know either. They're making it up. They make up the reasons because they sound reasonable. They are paid to sound reasonable. And there's no way to verify what it is that they say. The only people who can do it are the people who actually made the trades. The only people who know for sure what's going to happen next are the ones who are willing to make it happen. You see, we'll put on a trade and find ourselves in a nice monster little winner here and think, oh man, my methodology, it is just fantastic. And then the next time you get the same
When he's talking about methodology, he's talking about strategy.
signal. Not only that, it's a loser. You think, oh, now you feel betrayed. You think your methodology let you down. Your methodology wasn't designed to tell you what's going to happen next on a trade-by-trade basis. No technical methodology is. That's where your expectations are not in line with the reality of the situation. That's why it's so easy to make mistakes. It's because you're expecting something from your methodology that just doesn't exist. It just doesn't. It never did on a trade-by-trade basis. They will tell you what will happen. I don't want to use what's to happen next. They'll tell you what will happen over a series of trades on a percentage basis. This particular pattern will emerge X number of times, and when it does, there's a higher probability of this happening than that. If I limit my risk when I take the trade, and my profits, my profit potential is at least 1 or 2 or 3 times greater than what I need to risk, then over a series of trades, I will be a consistent winner. That's what trading is all about, guys, as a passive technical trader. Unless you're doing this other stuff, I just said it right then and there. I said it all right then and there. And the guy looked at him and said, reason why the market...
So what Mark Douglas is basically talking about, and this is from Trading in the Zone, and this is from his workshop, and I've just been diving deeper into that. At the end of the day, everyone has their own trading methodology, right? But nobody knows if the next trade they are going to take and put on is going to be a winner or a loser, and they never will. Nobody knows. I don't know if my next 5 A+ setups are going to be winners or losers, and I have no idea to know that. Now, for me, this is how you should look into trading. This is how you should look at trading, and this is, you need to think in probabilities. At the end of the day, I caught myself worrying about like, oh, if I need to take, what if I take a win today or a loss tomorrow, or a win today or a loss tomorrow, or a loss tomorrow and a win today, or a loss, just thinking of it in a day-by-day stand. You can't think of it like that. You can't think of it in a week-by-week. Oh, I'm profitable for the week. I've taken loss after loss after loss this week. You can't think of it like that. You can't think of it as just 1 month or 2 months or 3 months. You have to look at it at a year standpoint. Look at it at a 2-year standpoint. Think of it like this. Nobody knows. I took an A+ setup today, and it hit. I took an A+ setup yesterday, and it did not hit. It doesn't mean that, and that's the thing too, is I got caught up in this mindset that, and because I'm newer to trading, that when I take my A+ setup, and let's say I execute flawlessly and perfectly, when I take my A+ setup, I don't know exactly, if I took a loss, I would start questioning, was it the setup? Is it not A+? Or did I had to do something wrong, or I fucked up something? But no. Or when I take a win, oh, I predicted the market. I was right. I was correct. My methodology worked. My strategy worked. And it's like, no. Trading is gambling. Trading is 100% gambling, but it's gambling with an estimated guess off of probabilities. Think of it like this. I could have what's a good way to put this, actually? I've been thinking about this all damn day. When I get into the market, I mark out all my key PD arrays on the higher time frames, the mid time frames, and I know exactly what I need in order to enter and execute, which is a liquidity needs to be swept. There needs to be a break of structure of some sort or an inverse fair value gap. There needs to be a retracement into order block, fair value gap, equilibrium on the mid time frames, and then there needs to be a break of structure out of those confluences, right? Or there needs to be a liquidity sweep timed in with an SMT, timed in with a break of structure. That's my edge. That's what I look for. At the end of the day, I could see a beautiful setup that looks incredible, and I could take it, and it could lose. Doesn't mean that the setup doesn't work. Doesn't mean I fucked something up. It was probably just probability, and it was probability. Our trading methodology, at the end of the day, we are guessing off of estimation, and when we have an edge in the market, it gives us a better probability to win, right? A better probability to continuously win. And what he's talking about in that is, this is the thing. like I'm gonna go into just risk to reward too. Trading is so important because at the end of the day, you don't know if you will lose the next 10 trades or win the next 10 trades. All right? You have no idea to know that. But you can make yourself have a better chance by this. Listen, know what an A plus setup is to you, and you only take that A plus setup. Now, there's times, like earlier this week, I took a trade and I made a mistake on my stop loss on a trade that would have been a winner. And I would be up big on this account right now if I didn't take that if I didn't make that mistake. Mistakes happen. You got to think of it as day by day when you're experiencing the market. That's how you should look at it. Don't look at it, think of it in a year standpoint, but when you're trading, when you make mistakes, learn from them and grow. And don't make those mistakes again. And you're just getting better by 1% every single day, right? That's going to make you a better trader. That's going to raise your win rate. That's going to raise your probability of winning. So you could have a trading strategy that wins 70% of the time, but if you end up having a good trading plan, a good risk management, and everything else, you could get that win rate up to 70, 80%. Or you could have a win rate with a trading strategy with a 50% win rate. But if you have a trading plan for that and you execute flawlessly, you could get that to 60 or maybe even 70. So think of it like this. I have taken 3 losses this week and I have taken 1 win. I'm break even on this account. Does that math add up? If not, I'm going to explain it to you. If you understand risk to rewards, I'm going to get rid of this. I'm going to just put this on my screen. Here we go. If you understand your risk to rewards, think of it like this. Let's say it's Monday. It's the start of the week, and I have a trade that runs for a 5RR. And let's say Tuesday, I have a trade that runs for a 5RR, right? Whatever that risk is. Let's say I'm risking $230 per trade every single trade. I have a trade, so I'm up, and then let's say I have another trade that runs for another 5RR. So I'm up 15RR on the week. And then let's say I had the next 3 trades, so I'm up 3. I've had 3 wins, by the way. And let's say the next 3 trades, I continue to risk at $230 each time, and they lose. Now, you don't think of it as like, oh, I'm down 600 or so dollars, right? You think of it like this. 15RR, you're up. When you lose your trade with your risk, if you're not over trading, if you're not over leveraging, you're only losing 1R when you lose a trade, right? So think of it like this. Subtract 15RR minus 3, you're at 12RR. But you've taken only 3 wins and 3 losses. Your account looks like it's break even, but you're up because your wins are outweighing your losses because your risk rewards. So for the trades that I'm trying to take now, and then this is for the future, I will not take a setup if the first take profit is at a 1 to 2. I will just avoid it and I will wait for my better setup. I will wait for my edge. I will wait for my edge in the market. My edge in the market is a 3RR minimum, where I will take my first take profit and either exit fully out there, or I will ideally leave runners that could run for a 1 to 4, a 1 to 5, or a 1 to 6, right? And ideally, I would, if I could have a 50 to 55% win rate, and I'm targeting 1 to 3 to RRs, not only am I winning, let's say I have a 54% win rate, not only am I winning more than I'm losing, my wins are outweighing my losses because my risk to rewards are 1 to 3s to 1 to 4s and 1 to 5s. Where my losses are I'm just losing 1R. And this is another issue a lot of traders get into once they get into their funded, and I've learned this now just from this last week and listening to Mark Douglas, is never switch your risk. Never switch your risk. You're not an intuition trader yet. If you're just starting, you're just on your funded, finally you pass your eval, don't change your risk, especially not during a sample size. Wait for a year. For me, for the next year, I'm gonna continue to risk $230 until I am confident enough that I can bump it up or start leveraging more. I'm gonna continue to risk $230 and keep targeting those 1 to 3 RRs and leaving runners, and trying to see what at the end of the year is my win rate above a 50%, and have I continued to stick to chasing only 3 RRs and more, nothing less, right? And if I do that, congratulations, at the end of the year, you're profitable. But Mark Douglas, basically, what his biggest thing is, at the end of the day, nobody knows. A lot of traders think you have to know where market's going to go in order to make money. Think of it like this. The only way to make money in trading is to just click on your screen. Click your mouse, right click on your mouse, and you can make money. Nobody knows where the market is going to go. And this idea of an edge, this quote unquote edge, it gives you an idea, somewhat idea, it gives you an estimated guess that's your edge in the market. Think only 1% of people succeed in this market. So why would you take a trade that doesn't follow your edge? That's just gambling with low probability. You want to be gambling with a higher probability. And how do you get that higher probability? By having a specific trading plan that you target, and you only take those trades by having good risk management and by trading your edge. That's your edge. For me, if I think of it like this, I could take 3 wins with $230 I'm risking with a 1 to 3 RR. I'm up big. And then I get cocky and I'm like, okay, this next trade I'm going to risk $2,000. If that trade loses, bye-bye to the account. Bye-bye. Forget all those 3 wins. I just fucked myself over, even if it was just 1 loss, because my risk was different, right? And I'm not going to take trades where I'm going to be de-risking. I'm basically de-risking right now because of the government shutdown, because a 1% on 100K is $500. I'm risking $230 to $250 around that range. Today was $270. It's under $300 I'm risking. And if I were to start over leveraging or changing this, I could screw my statistics up. I'm not trying to do that. So this is just advice for me to come back to and listen to this video. I come back to all these videos all the time, and I want to, in a year from now, I want to do the same thing to see how far I've come. And in 2 years, I want to do the same thing to see how far I've come. But for me, in the next year, I'm going to continue to risk $230 on every single trade that I take. And I'm only going to take A+ setups. And I'm going to make sure that I'm executing flawlessly to the point where my stop loss is in a valid place, where price comes past it and just invalidates the setup. That's the goal. And then not only that, my take profits will be in good places. Like I said, only taking trades where my first take profit will be a 3RR. And if it's not a 3RR, I'm good on that trade. I'd just rather not take it. And obviously, I might make mistakes, but that's why we learn from those and we can get 1% better over time, right? But I would highly suggest, actually, and I'm going to look this up. So you can watch all these videos. I'm currently watching this one right now, and I'm going to continue to keep watching. Oh, I am not showing the screen. Look up Mark Douglas on YouTube, or you can get his book, Trading the Zone. I would do both. And you can watch all of his videos. Trading the Zone workshop, it's 3 hours. If you don't watch it, good luck. You're probably not going to make it in trading. I mean, he has thousands and thousands of videos. I mean, you can, not thousands, but you can keep going and going and going. There's other videos like this that you could watch too on him, but I think it's best to just get his workshop. But basically, with what I was saying, trading is literally just probabilities. It's all it is, and you need to learn to think in probabilities. And I'm to the point where I'm understanding it, but I need to become a professional at mastering it. I need to master it, right? Where I'm literally in the market every day. And I felt this way today. I really felt this way today, because today with that win that I took, I felt the same as when I took a loss yesterday. There was no emotion between the two of them. There was no emotion. Because yesterday I literally listened to a 5-hour video on Mark Douglas, and I woke up at 5 a.m. today and I listened to the same fucking video. I haven't finished it yet. I'm almost done with it again. But I'm going to continue for the rest of the month, or the next 2 months and 3 months, to continuously listen to Mark Douglas every single day until it is engraved in my mind and I've adopted that mindset. Because I've noticed the change just today. And at the end of the day, that's the biggest part, is just understanding that I could take 10 straight losses, and that's okay. With how much I'm risking, which is $200 to $250 per trade, I could take 20 straight losses in a row and I am fine, and I would still trust my setup. I could take a loss today, tomorrow, the next day, the next day, the next day, the next day, the next day. I would still trust my setup. Do I think that's going to happen? I don't think so. But you don't know, and you don't think of it like that. I'm not going to take it personal if I do take those losses, because then you have to go into a little overview with yourself and start questioning, like, okay, you have to do some analysis. Are these losses my fault? Am I doing something wrong that I could be doing better? You got to be honest with yourself, and that's the hard part about this. You have to be actually honest with yourself and hold yourself accountable. And if you do that and you aren't doing anything wrong, it was just probability, and these were truly A+ setups, you're fine. It's okay, because it's such a small sample size. If I even lost there's profitable traders who have a losing streak for a month. It's a small sample. You got to think, even a month is a super small sample size. That's nothing compared to a year, 2 years, 3 years, 4 years, 5 years. Now 5 years is a fucking sample size, and that will tell you a lot about yourself and how you actually are good, and how good you are at with trading these markets, right? I mean, seriously, I'm trying to understand and get into the mindset of, I'm not going to take a loss personal, because I was looking at it as it was hurting my ego, where if I took a loss, I'd be like, I had to have done something wrong. I had to have done this wrong. I had to fuck something up, or maybe the setup really was an A+, And if you start doing that, you start getting scared to take that setup. This setup today could have not gone in my direction. It could have not worked. But it's a beautiful continuation A plus model. It is. And if I start looking at it as like I did something wrong or the setup wasn't A plus or it didn't work out, the next time that setup comes out, I'm not, instead of putting on the trade, I'm going to be too afraid to take it, and I'm going to miss out on a winner. It's the same trade with yesterday. Same thing with yesterday. That setup yesterday was A plus, and because it didn't play out, if I looked at it where I was like, "Fuck," I'm like, "Shit." If maybe the setup wasn't A plus, maybe I shouldn't take this setup anymore. Well, the next time the setup shows itself, if I don't execute on it, what if it plays out? Maybe it doesn't, but maybe the next 5 trades it does, right? You can't think of it like that. You have to trust your edge, trust your strategy. I mean, I've been doing this shit for almost a year now. I've been trading for almost a year now, right? And I sometimes question, am I doing things right? Am I doing this right? And that's the hardest part when you're a beginner. But I know that if I keep journaling these trades and I make it sure I make damn sure I'm journaling my trades. If I keep journaling these trades, it's going to become second nature. Where at the end of the day, I just get the market experience and I just trust myself more. And that's the goal, is to trust yourself and to just trust your strategy. Thinking probabilities. Like, that's the biggest fucking part. Because the moment, Mark Douglas talked about this, the moment you start questioning your setup, that's A plus, you're going to start hesitating with it. You're not going to want to take it. And that's when you get into that psychological battle, which will just fuck you in the ass. And that's the hardest part about trading, in my opinion, is the psychological part, because, like I said, you need to be honest with yourself. Was this setup really A plus? You can't talk yourself into it. You're not an intuition trader yet. I'm not an intuition trader yet. I have a buddy who is. He's ridiculous. It's nuts. I'm not an intuition trader yet. So you have to be honest with yourself. Did I talk myself into the setup? Was this setup truly A plus, or did I talk myself into it and hoping that it would go in my direction? And if it was truly A plus and it didn't play out in your direction, it's probability. It's probability. Journal it. Move on. Distract yourself. Make sure your psychology is right. And that's how you need to think about this shit. That's how you need to go into these markets, and that's how you need to think about this. And it's the same with a win. Someone could take a win and be like, oh, my strategy works. My edge works. This will win a lot and a lot and a lot. And then the next time it doesn't play out. And they're going to be like, well, what the fuck? I did something wrong. I had to have done something wrong. The setup played out last time. It's probability, dude. It's probability. No trader knows. There's no such thing as a 100% win rate with a strategy. There's no strategy that has a 100% win rate. And anybody that's trying to sell you that is a fucking liar. It's a fucking liar, and you're going to get scammed. There's no such thing as a 100% win rate strategy. No trader knows. Whenever they see their edge, they do not know if it's going to be a winner or a loser, and they don't need to know that. That doesn't matter. You shouldn't be thinking of it like that. All you should give a fuck about is having this is a set rule book. Have a trading plan, a set in stone risk reward that you like to target. And there's times where let's say, like I said, for me it's 1 to 3s. I'm not going to take a trade that goes for a 1 to 1. Fuck no. I'm not going to take a trade that goes for a 1 to 2. The first take profits at a 1 to 2. I'm not going to take that. We're targeting 1 to 3s. I have my set in stone risk. I'm risking $230 per trade, $250 per trade. That's what I'm comfortable with. And not only that, have your strategy, have your edge. Now all that matters is that you execute flawlessly on that. This is how you get good at trading. You have those things set in stone and what you need to look for, and you have a decent understanding of the market, just on the patterns that you see, right? These patterns play out in every single time frame. Have a decent understanding of the market. Have that strict trading plan. You follow that trading plan with discipline, like your life depends on it. Imagine when you're in a chair, and if you don't follow your trading plan, the chair just shocks the fuck out of you. Or you hate hot sauce, you can't handle spice. You don't follow your trading plan, try some fucking hot sauce. See how you handle that, and that should be your punishment, right? You have to think of it like that. You have to think of it like that. Follow your trading plan. Have a strict trading plan, follow it. Have a set in stone, predetermined risk that you are willing to risk for the next 20 trades, right? Every single time you're going to risk the same, and follow it and trust it. And when your edge, and then you mark out all your shit on the charts, and you wait for that edge to show up. And when the edge shows up, Zig Ziglar, Mark Douglas talked about this, and I think his name was Zig Ziglar. He had a thing for in sales that whoever speaks first loses. And Jordan Belfort took this as well. Jordan Belfort lived by this. My buddy read this from Jordan Belfort's book, and I'm pretty sure it came from Zig Ziglar. Zig Ziglar did a mastermind workshop, and Basically, he asked these people a certain question, and he was asking them all these questions and all these questions, and then he looked at them, and as they're thinking and they're ready to answer, he screams at them, "Shut up!" And he screamed that shit. He screamed it, right? And they're like, "Huh." And he basically taught them that at the end of the day, whoever speaks first loses. And Mark Douglas used this with his workshops and noticed that, when he ended up speaking more and he was speaking more than the person he was trying to sell to, he sold less. And when he was speaking less and building rapport of the person he was trying to sell to, letting the person he was trying to sell to talk more, he got to learn more about him and he was able to sell more. And this analogy, I know it's weird, but it goes into trading. Like I said, you have your strict trading plan, you have your strict risk management that you follow every time, and you have your edge. You get into the market, you mark out all your PD arrays on every time frame, and you wait for your edge to show up. And when the edge shows up, instead of don't shut up, it's don't think. Don't fucking think. Don't even think for a second. Execute. Trust it. Just execute. Entering. Get into the market. Get in. Just put yourself in. And make sure your stop loss is in a place where price, if it goes past it, invalidates the setup. Make sure your stop loss is in a correct place, a valid point, and make sure your take profit is in line with your trading plan. And make sure you have good smart take profits as well, right? That's the way you should do this. That's how you should plan. That's how you should follow this. And at the end of the day, all that matters is you followed your plan. You followed your plan. You just followed your plan. If you don't follow your plan, you're breaking your rules. That's what people are talking about. If you don't follow your plan, if I start taking trades that target for 1-to-1s, I'm breaking my rules. If I start taking trades that target 1-to-2s, I'm breaking my rules. If I start risking more than what I am, I'm breaking my rules. If I start hesitating on my edge when it shows up, I'm breaking my rules. You don't do that shit. And you fucking force yourself to literally, as soon as your edge shows up, you execute. You execute. You execute. And you get in the habit of doing it, and you're not caring if it's going to be a loss. How do you really get in the zone when it comes to trading? The whole idea of trading in the zone comes from trading without fear of loss. You don't give a fuck if you're going to lose because you understand that your edge over time will play out in your favor for what you're targeting. You trust that with your life, like your life depends on it. And obviously that doesn't happen right away. You gotta get some reps in the market. You gotta take some losses in order to learn. You gotta make some mistakes in order to learn. I've made plenty of mistakes. I've made mistakes where I've gotten in really late. I've made mistakes where I've gotten in too early. I've made mistakes where I put my stop loss in the wrong place and price stops me out and then goes to my take profit. I've made mistakes where I've taken profits too early, where I've sold off too many contracts at let's say my take profit's at a good point, but I sold off way too many contracts at that point. You're going to make these mistakes, and that's okay. That's how you learn. Failure is feedback. That's with life. When we fuck up in life, how do we evolve? Is human evolution, pattern recognition, right? And you learn from it. People with low IQ, they make mistakes over and over and over again, and they never learn from it. People with higher IQs, when they make their mistakes, they learn from it, and they don't do it again. That separates. That's the difference between these people with low IQ and the higher IQs, right? So the whole point of how to get really good at trading, how to really master yourself, how to trade in the zone, is to have your edge, have your trading plan, and follow it. And you're set predetermined risk, and you follow it like your life depends on it. And the moment you don't, get the fuck off. Write it down. Do what you did wrong. Write down exactly what you did wrong and why you fucking did it, and get off. Get off. Don't. There's no reason. Let's say price, because this is the thing too, is you could not follow your plan, your trading plan, not follow your rules, not have your predetermined risk. Let's say you over leveraged, or you were over risked, or you took a loss and you got it back in, and then you take a win. You're breaking your trading rules. Even if you take a win, you're rewarding yourself for being an undisciplined little bitch. You're rewarding yourself for being undisciplined. Do you think the market rewards people who are undisciplined? No, it does not. The market rewards people who are disciplined and follow their trading plan and follow their rules over prolonged periods of time. There could be someone, like I said, who doesn't follow their plan, doesn't follow their rules, and they win. They can get lucky. But over a prolonged period of time, over a lots of good sample size, they're not going to be profitable because they don't follow their plans. And that's the whole premise, is that if you follow your trading plan and you follow your trading rules and everything that I just said, if you follow those to a T and let's say maybe the first month it doesn't go your way. If you follow those to a T and when you make those mistakes, you learn from them, and you're getting 1% better every single day, you're getting 1% better every single week, every single month, you're focusing on when you make those mistakes, you're learning. Maybe it's not the first year. Maybe it's not the second year. It could be the second year. Maybe let's say it's the third year. If you do that over that long of a sample size, you will be profitable. Without a doubt. if you just follow your rules. And I'm not just speaking to anybody, because the people who watch my videos, they don't fucking trade. There's one person that does, and that fucker trades. Everyone else, I don't know what the fuck they're watching this shit for. Like, I'm not interesting really whatsoever. I don't consider myself interesting. I literally only give a fuck about this shit. And a little other things, obviously. But this is for myself to just go back on. And just because this is the night that this is the last 2 days is when I really started to understand this. Like I said, I took that loss yesterday and I took that win today, and I feel the exact same. And before this week, when I would take a loss, I feel like shit. When I take a win, I feel fucking like I'm on top of the earth. But now that I'm thinking in probabilities, I understand that the market can just take this shit away from me if I'm not disciplined. So the only thing that matters is not the P&L. It's not how I ended the week. That's cool and all. Maybe I ended the week green. Dope, great. It's not great if I didn't follow my trading plan or my rules. What matters is, did you follow your plan, and were you disciplined? Were you disciplined enough to follow your plan, execute when your edge showed up, and have your predetermined risk, and have it the same every single time? If you don't do that, why the fuck are you trading? Shit's not for you. Go do something else, because this shit is not for you. It is not for the weak. And I highly suggest anybody who is getting into trading, I put some of my buddies on, to look into Mark Douglas. Get his book, Trading in the Zone. Get the audiobook, get it at your library, get the PDF, do whatever. And read it. Like, just read it over and over and over. And then go to his seminars on YouTube and just watch them. I mean, I've had dozens of people hit me up about trading. Dozens. And I've sent them the exact videos that I watched. I had a buddy to bring this up the other day. He's had 3 success stories. He's had dozens of people hit him up about trading, and he's had 3 success stories. And he's gotten to the point where if people hit him up, he just sends them TGR's boot camp and the trading transformation. He said, finish this and then come talk to me. And I do the same. People hit me up about this shit. I'm like, okay, I'm going to send you these YouTube videos. Watch those, give it your full attention, study them, and then get back to me. Because if you don't do that, I mean, they get into it for the money. And that's what that's why we all get into trading. I got into trading because of the money. I saw TJR making fucking $200,000 in a day. And I was like, how the fuck did he do this? And before it was even 10 a.m., I was like, how the fuck did he do this? This dude just made $200,000 in a day. Everyone gets in it for the money. The reason you stay in it is different, because it's like you have to learn the skill. You have to, in order to even succeed in this, and like I said, Mark Douglas talked about this, to be a consistent winner, you have to understand this shit and respect these markets and actually be disciplined. I want to play that video one more time. Just so it's in the head.
And why the market went up or the market went down, other than the fact that there was an imbalance in conviction between buyers and sellers. Because the people who do this will not tell you unless it's in their best interest to do so. And the reason, and the people who report it in the news agencies, they don't know either. They're making it up. They make up the reasons because they sound reasonable. They are paid to sound reasonable. And there's no way to verify what it is that they say. The only people who can do it are the people who actually made the trades. The only people who know for sure what's going to happen next are the ones who are willing to make it happen. You see, we'll put on a trade and find ourselves in a nice monster little winner here and think, oh man, my methodology, it is just fantastic. And then the next time you get the same signal and then you don't get anything. Not only that, it's a loser. You think, oh, now you feel betrayed. You think your methodology let you down. Your methodology wasn't designed to tell you what's going to happen next on a trade-by-trade basis. No technical methodology is. That's where your expectations are not in line with the reality of the situation. That's why it's so easy to make mistakes. It's because you're expecting something from your methodology that just doesn't exist. It just doesn't. It never did on a trade-by-trade basis. They will tell you what will happen. I don't want to use the words to happen next. They'll tell you what will happen over a series of trades on a percentage basis. This particular pattern will emerge X number of times, and when it does, there's a higher probability of this happening than that. If I limit my risk when I take the trade, and my profits, my profit potential is at least 1 or 2 or 3 times greater than what I need to risk, then over a series of trades, I will be a consistent winner. That's what trading is all about, guys, as a passive technical trader. Unless you're doing this other stuff, I just said it right then and there. I said it all right then and there. The guy looked at him and said, reason why the market went up or the market went down.
Did you get it? I had to play it again. Like I said, if you need to go back, I sped it up. If you need to go back, watch his Mark Douglas. Watch his videos on YouTube. I mean, that's all it is. That's all it is. It's just trust your fucking edge. I have a decent grasp of what my strategy is now. I mean, I've taken trades where I've had 50 RRs. And if you know trading, you know a 50 RR is fucking ridiculous. That's retarded. I'm getting banned. 50 RR is ridiculous. I've had trades run for a 50 RR. I've had trades run for a 30 RR. I've had trades run for a 15, 16 RR, for a 5 RR, and a 1 RR. I've been able to predict price off of that. Like, right? I've been able to see it, like, the way my edge, I've been able to see my edge play out. But it's been a short sample size. I've only understood my strategy for like the last 4 months decently. Like 4 months ago, I decently started to get the grasp of it, and I was like, oh my gosh, I'm like, it's hitting me. Because I literally, I could just fold through this whole fucking thing. Let's look at this. We got the beginning of this. We just look at all the pages in between there. We'll actually go. Here, we'll go from here. Ready? Got all. Dude, it's not blank, but I mean, I got a bunch of other notebooks like that. The moment I started getting into it, like deeply understanding it, was 4 months ago. And before that, I was watching my buddy live trade, who was profitable. I was watching him live trade for like 6 months, damn near 3 months. Around that time, six to 5 months, I was watching him trade, and I was like asking questions. I wasn't really getting the grasp of it. I was seeing it kind of play out, but the moment I started actually, like, he took me. We had a Discord full of a bunch of people, and we were trading in front of them. He kicked those fuckers out, and he just brought me into it. And he just literally every morning, me and him would get on, and he'd let me ask him questions. I would record our fucking phone calls so I could go back home. And I have another notebook right here. I can go back home and just write everything down. And 4 months ago, I started decently understanding the strategy. And from that 4 months, I remember I went on a 2 to 3 week win streak. And I was like, holy fuck. Like, even on trades I didn't take and I just marked them up, they hit. And I was like, holy shit. Like, this works. My psychology was shit, right? Without even realizing my psychology was shit. I felt like I was not emotional until I started listening to Mark Douglas. I realized I had it all wrong. And now I've made small mistakes over time, and I'm trying to learn from them, right? And I'm going to probably continue to make mistakes. I'd hope not, but it's bound to happen. I'm not perfect. Continue to make those small mistakes, but over time we get better, and we get better, and we get better, and we learn from them. This shit is a long game. Trading will not get you rich quick. Like, it's not a get rich quick scheme. It's not at all. So when the people who try to hit me up about it, I know they're just in it for the money. So maybe some will stick to it. Most won't, because it's not a get rich quick scheme. It's not. It's not a scam. It's not a get rich quick scheme though. But once you do actually understand it and you know how to trade in the zone and you become a consistent winner, even if that consistent winner is a 52% win rate with a 1 to 3, 1 to 4 RR, you're profitable. Over a prolonged period of time, if you do that, you're profitable. Once you do understand the grasp of it and you're able to get that bigger sample size, you will get rich quick. I mean, it gets to the point, especially if you're using prop firms, like, that's just not your money and you get to leverage more and you can take payouts. Like, you can get rich quick from this shit. And I used to think of it too, where it's like, and the next year I'm going to be trying to make 10, not only 10, but like 20, 30, 40K months, right? But what if I'm not? Am I going to give up on trading? Am I going to quit? No. So I'm not going to think of it like that. I'm going to focus on the day by day, on just getting better and improving. But when I'm taking my trades, I'm going to think of probabilities and think of, well, let's see what it is in a year. But let's focus on the trade right now. And journaling it, let's journal it. Let's focus on the trade right now. Did I make a stupid mistake or did I not, right? And if I didn't, and that setup was actually A+, okay, perfect. Let's not worry about this loss. Let's go into the next day with a brand new mindset, because I would take the same setup over and over again if it showed itself. And if I did make a mistake, it's like, okay, well, that's a mistake I made. Let's try not to make the mistake again. Let's figure out how we can avoid making the mistake again, or make it less frequently, right? And if you make it less frequently, well, what do you know? Your win rate goes up over time. It's how this shit works. I mean, TGR the last 2 months has had a 58% win rate with a crazy risk to reward, but 58% win rate. And obviously he's making more money, but he has the account, he has the capital, he's able to risk more, he's able to leverage more. That's the biggest part, is he's able to leverage more. It's the same thing where it's like, yeah, I'm risking $230 per trade. And my trades that I hit, like today I had a trade that ran for $700, damn near $700. It's like over time, over a prolonged period of time, once I start leveraging more, risking more, those 1 to 3s or 1 to 4s that turn into that are $700, soon they'll be worth almost $2,000 or $3,000. Not only that, what if they're worth $3,000 across not only one account that I have right now, but 5 accounts? Maybe not 5 accounts, 10 accounts, or 15 accounts, right? You do the math, $3,000 on 15 accounts. I mean, you do the math, what that is. That's ridiculous. Or then it gets to the point of obviously a live account where I'm able to leverage more and I could start risking $3,000 per trade, and my three RRs are hitting for $6,000. And runners, right? It's a long game. This shit's not going to happen in a day. It's not going to happen in a month. It's probably not going to happen in a year. But I know that over time, if I stay disciplined, if I stay consistent with my trading rule, my trading plan, where, like I said, where it's $230 to $250 every time I take an A plus setup. When I see my A plus setup, I execute flawlessly. Stop loss is in a perfect place, and my first take profit is at that 1 to 3. If I do that for a prolonged period of time, I know that over time, we're rinsing, and we become a consistent winner. And at that point, we can trade in the zone because we're more focused on just following our rules. How do you become better at trading? Obviously, understanding technical analysis. And this is when people say technical analysis strategy is 10% of trading. And they say 20, I say it's 10. It's 10% of trading. Everything else is 90%. 90% psychology. That's the biggest part. I know a buddy who is insanely lethal at predicting price. Like, I've seen this dude hit crazy RRs. I've seen him hit him in like the nastiest trades. And he still is unprofitable because of psychology, because he's taking trades where he's risked more than he usually does. And he doesn't even have that long of a sample size. He's taking trades where his risk to rewards are always fucking all over the place, right? He's targeting high risk rewards, but it's not a set in stone, right? And let's say, like, for me too, like, maybe my first take profit's at a 4 RR. I'll take that. It just needs to be over a 2 RR. It doesn't need to be exactly, my first take profit doesn't need to be exactly a 3 RR, but it needs to be over a 2 RR, a 1 to 2. It needs to be a 1 to 3 or more. And if it's a 1 to 4 or 1 to 5 is my first take profit, bang. Like, yeah, we can either take full take profit there or let runners go after. Sell off 75% at that 5 RR and then let runners go for maybe a 8 RR or 10 RR. And I mean, that $230 day, instead of it being a $700 day, it turns into almost a $2,000 day, right? $2,000 day. And then I'd have to lose how many fucking trades just to get that back to break even. You gotta think of it like that. But yeah, this video went longer than I wanted it to. It's late as hell. I need to go to bed. I'm gonna shower. I'm gonna get this thing uploaded. But I hope this video was some actual good information for you. And like I said, if you're wanting to get into trading, I don't know why you would, but if you wanted to get into trading, look into TJR or ICT, in my opinion. TJR's bootcamp. Start with that, and then just start with that, give it your all, and then go into his trading transformation. And then once you do that, look into Mark Douglas and watch his seminars. Then you can start getting into the markets. Then you can start actually maybe opening up a paper trading account, or not even a paper trading account. Maybe you already did. Open up an eval, buy an eval, try to pass it, see how good you do, see how well you handle taking losses, see how well you can follow your rules, right? But yeah. Today was, like I said, 10/9/25. It's a great month to be in October. I love October. Best time of the month. I love fall. October, it goes September, October, November. Best time of the year. Best time of the year. You can't beat it. But yeah, this was the setup I took today. We'll just zoom back in. If you want me to show execution, I will show execution. Because I'm assuming people will be like, oh, he doesn't actually take the setup. Show chart executions, save, it'll be blue. Let's look at this. Oh, did you look at that? Where I got in. Oh, I keep putting that back on accident. Where I got out on the first one, because like I said, this closed out at my first take profit. Where I got out on the second one, because where was that second one? Oh, it was at that low. And the third one would have been here, but it did not go to it. Oh, I got to zoom down a little. Would have been right here, but it did not go to it, right? And went back up. I'm going to get rid of all my bullshit that I have now marked up on the charts. Let's get this off. But dude, genuinely, nothing is better than September, October, November. Weather is nice. Maybe it's a little chillier, but it's just the colors are beautiful. It's just that time of the year. You get Thanksgiving. You get Halloween, which is pretty dope. I love the vibe of Halloween, right? It's not even the dressing up, but I just love the season. I love the spooky season, right? Call me corny. I don't care. But yeah. Tomorrow, actually, will be a normal trading day. We have prelim something. consumer sales, I think, or something. It's red folder, so hopefully it gives some good volatile price action. Hopefully news actually comes out. It's been iffy with this government shutdown, but that's just what I'm wanting to see overall. All right, let's go to MNQ. Holy cow, I'm gonna take the shower. Oh, that just shows you where I was marking up everything today. Look at all this shit. Just gotta get rid of this. Not only are we back at all-time highs or what? Fucking damn near. I hate that. Hopefully Asia session and not Asia, London session actually pushes us lower, and then hopefully New York can just go back to all-time highs and we can catch some lawns tomorrow. But who knows? Because like I said, we were at all-time highs today, and I thought we were going right back to the all-time highs. No, that was not the case at all. And that's the thing too, is your bias can be wrong sometimes, right? I'm going to keep this sell side liquidity. I'm going to stay on the 4 hour because we still have sell side liquidity right here that we can mark out. Buy side liquidity, I'm going to continue to keep that up there though, because we have the 1 hour high right here, which I'm assuming price will end up sweeping out. And we have another 1 hour high right here that I'm assuming price will sweep out. And we'll go over to ES, MES. Do the same thing here. It's moved all the way back up. We pushed lower here, came into the 4 hour, we pushed all the way this low today, and then we came right back up. Of course. I'm getting tired of these all-time highs. I just can't wait to go to non-all-time high trading, genuinely. It's just going to be such a breeze. That's another thing too that gives me hope, is if you can be consistent and take wins in shitty market conditions like a government shutdown and all these, like, imagine when the price action is actually good. You could probably do pretty fucking good. Let's just, here is sell side liquidity. We're going to go to MNQ. We're going to keep all that sell side liquidity resting below. We're going to mark out this one. Just got a couple other things I want to mark out, and then I'll end this video. I'm not going to mark out fair value gaps until the morning. Let's go to NQ. We're going to go MNQ. We'll make that MNQ. Make this MES. Turn off bar replay. This is the worst part because these are usually freaking layered with bullshit. Oh, disgusting, right? Take out that. We can take out that. The market's still moving. Oh. I not only that trade today, by the way. I didn't even think of that, but when we were in that setup to go lower, we were coming into equilibrium on top of that on the 5 minute. So we were in the premium price range, and then we went lower. So that was another confluence to go short as well of that 15 minute or the 5 minute retrace. So I forgot to bring up equilibrium. I didn't even mark it out. Not only that, but we can just look at this too. I want to mark this out. We can take it from the high. Actually, we'll just do this. Today, coming into the day, we take it from the low all the way to the high. And we came, where's market before it came down? It came all the way down to equilibrium to then do what? Come back higher. We were in premium price range before this, below this 0.5 premium price range, and it pushes us higher. So, if this 4 hour closes bearish, we then come here and we want to see price tomorrow ideally come into here and then push higher. So, I mean, maybe short bias tomorrow, but who knows? I'm going to keep this 4 hour because the 4 hour is still relevant. The daily hasn't done anything yet. No, it has not. We keep the 4 hour because it's still relevant. And that's on NASDAQ. I'm going to mark out this sell side liquidity right here. Sell side. And we're going to go over to yes. Turn off this. Beautiful. Get rid of this. Get rid of this. Get rid of this. Can I get rid of a bunch of shit, dude? Damn it. Look at... Oh, I thought that was... Yeah. I thought silver was up at 185 for a second. I was just saying, no fucking way. It'd be ridiculous. I would actually... Oh my god, I would have laughed. Sell side. I wonder if my actually... But while I'm waiting, I wonder if my silver setup is still, like, on here if I got rid of it. No, it's not. Damn it. That would have been so dope to show. Market moves in a mysterious way. Alright, get rid of this short position that we took. We can keep up, we can get rid of this 30-minute. We have a low right there, potentially a high right there. We're going to get rid of that 4-hour gap. Got inverse. This one got respected. There was no 4-hour gaps in between here. Yo, low key, is that an order block though? Four-hour order block type of movement. Let's look on the 1 hour actually. Self liquidity, we get a break of structure. I think we have a 1 hour order block then. That we could be, I think we go all the way up to all-time highs if we're getting bottom tick this. I'm gonna mark this up actually. I'm just gonna mark up like this. Put the stop sign to like this low. Because I'm pretty sure this is an order block we're coming into. But it'd be nice to see it come in and fill it. Because like I said, when we're looking at order blocks, we're looking at the candle that sweeps liquidity. There's liquidity right here in the 1 hour, right? Liquidity resting right here in the 1 hour. We sweep it. We're looking for a break of structure. High, low, up candle, down candle. Not high, low, but up candle, down candle. We have a high. We break structure past it. That is our order block. And what are we seeing? We're seeing a retracement down into it. I'm assuming it's going to market's going to fill orders within here probably during London session. Maybe sweep out a low right here or just this low right here and then push higher. And we'll probably be at all-time highs tomorrow, but maybe I'm wrong. I'm going to get on the market tomorrow and check that out. But yeah, that was the video for today. Have a wonderful night. Get after it, Jeets.